In this video, I'll give you an easy introduction to the IRA and the Roth IRA, and we're starting right now. Hey guys, Elliot here. So chances are you've heard of an individual retirement account or IRA, but may not know all that much about it. If so, this short video will explain all the essential details. An IRA is a retirement plan which allows contributions from workers outside of their employer. Now, employers can certainly set up IRAs for their employees just as they do with 401k plans, but 401ks are tied to employment. You can't set one up yourself. An IRA is the only mainstream retirement account that individuals can open, fund, and manage completely on their own while still retaining some tax advantages. IRAs were created in 1974 as part of what was called ERISA legislation. The two main types of IRAs are the Traditional IRA and the Roth IRA. However, a handful of other variants do exist, and they include the SEP IRA, Simple IRA, Spousal IRA, Non-Deductible IRA, Rollover or Conduit IRA, Payroll Deduction IRA, and the Self-Directed IRA. Here, we'll just focus on the Traditional and Roth ones. A Traditional IRA is the original and most common type, and it's fairly straightforward in how it works. You open an account and direct a portion of your pre-tax income toward investments such as stocks and mutual funds that can grow tax-deferred. The advantage for the present time is a lower tax rate because you're using pre-tax income to contribute and lower your overall taxable earnings. In most cases, contributions to traditional IRAs are also tax-deductible. Now, the advantage down the road is that the capital gains and dividends earned by the IRA are not taxed until withdrawal, and then they are taxed at the regular income rate of whatever tax bracket you're in at the time. If it's presumed you will be at a lower tax bracket upon retirement, you will then likely save on taxes. Because the IRA has such tax advantages, the IRS limits how much a person can contribute annually, and this is mainly so individuals don't use these accounts as a limitless tax shelter. The 2025 limits carry over from 2024 and are $7,000 for those under age 50 and $8,000 for those age 50 and over. Also, as of 2019, there's no upper age limit for contributions, so you can contribute to an IRA indefinitely if you don't wish to retire early. No gross income limits are required to open an IRA, but a full tax deduction is limited. This is on purpose so the IRA can provide the most benefit to lower and middle income individuals. What are the income limits to claim a full deduction? Well, for 2025, your modified adjusted gross income or MAGI has to be under $77,000 if filing single and under $123,000 if married filing jointly, with a sliding scale phasing out the deductions as you make more money. Pulling money out of an IRA is a straightforward process. You can begin after age 59 and a half, or else a 10% penalty will be assessed, and allowances do exist for some hardships or life events. In general, a traditional IRA is best for workers who think they'll be in a lower tax bracket after retirement and people who don't have access to other retirement plans such as 401ks. IRAs in general are quite popular in the United States, with about 65 million individuals holding at least one type of IRA for a national total of $15 trillion in assets. To open a traditional IRA, or really any IRA account, you can go to an online or brick-and-mortar bank or brokerage such as Vanguard, Merrill Edge, Ally, Charles Schwab, Fidelity, and many others. So now let's briefly turn our attention to the Roth IRA. It is similar to a traditional IRA, but with a complete opposite approach to taxation. Instead of using pre-tax dollars, an individual pays taxes at their current rate upon depositing funds into the Roth, and then the funds grow and can be withdrawn completely tax-free. Essentially, individuals are taxed on the smaller seed, but not on the larger tree years later, as is done with the traditional IRA and also the 401k. If this sounds like a significant tax break, that's because it certainly is. The Roth IRA was originally called IRA Plus and was first proposed by Senators Bob Packwood and William Roth in 1989. However, it wasn't until 1997 when this type of IRA was actually established through the Taxpayer Relief Act and named after Roth, its chief sponsor at that point. Taxation aside, the Roth IRA is quite similar to the traditional IRA. For example, the contribution limits are the same, $7,000 annually for those under 50 and $8,000 annually for those over 50. Income limits do exist for a Roth IRA, but they are fairly generous. For single filers, the income has to be under $161,000 to qualify for a full contribution and $240,000 if filing jointly. Withdrawals from a Roth fall into two categories: qualified and non-qualified. Qualified distributions are essentially the money you put in, and you can withdraw that anytime. However, with account earnings such as capital gains, interest, dividends, etc., it's a different story. The main hurdle here is the 5-year rule, which states that you must wait 5 years after opening the Roth IRA to get access to earnings, and you must meet at least one of the stipulated conditions, such as turning 59 and a half or using the funds toward a home purchase, among others. And if conditions aren't met, you guessed it, a 10% penalty applies. Whether or not a Roth IRA is more beneficial than a traditional IRA depends on the tax bracket of the filer, the expected tax rate at retirement, and personal preference. A Roth is better if the account holder anticipates being in a higher tax bracket in retirement and wants to take advantage of the tax-free withdrawals. A Roth is also a better choice than a traditional IRA if you might need to access some of the money before retirement age, as Roth withdrawal rules are somewhat more lenient. It's not unusual, however, to maintain both types of IRA accounts or to combine a 401k with a Roth IRA, which is exactly how I do it. Okay, that was a quick discussion and overview of the IRA and the Roth IRA. As always, if you enjoy this content, please do like and subscribe, and I will see you in the next video.